You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 14th day of May, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. Now, the first broadcast is private. That's for members only and those who are taking their 1-week free trial. If you have not taken your 1-week free trial, go to mytradingiq.com. And at the very top of the page, it says 5-day free trial, no credit card required. Just click the link, fill out the registration form, hit submit. Make sure you fill it out properly so that we get it. And then typically same day, we'll get your desktop set up, get your indicators indicating, and your trial will actually begin the following trading day. Now, don't worry about what day of the week or weekend or hour of the day you sign up for the trial. You will get 5 consecutive trading days, even if it stretches over a weekend. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and we come back for the afternoon broadcast. That would be this one. Now, there's a couple different ways to join the afternoon broadcast live at 12 noon Eastern. The best way, you only have to do this once. Go to mytradingiq.com and scroll down the page to where it says afternoon broadcast. Click that link, fill out that 30-second registration form, and you're done. What'll happen going forward every trading day, you'll get an email about an hour before this broadcast starts. So at 12 noon Eastern, all you have to do is open the email and click the link inside, and it will automatically log you into our platform. Benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Now again, the morning broadcast is private, but the afternoon broadcast is open to everybody, everywhere on planet Earth with an internet-connected device. Now, there will be days when you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're busy and you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel. It's very easy to remember, youtube.com/CFRN. You've already got the YouTube part memorized, so really all you have to remember is the CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, but we also archive each and every daily broadcast. Currently, there's over 2,500 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. And just pick some days at random. Watch a little bit, fast forward a little bit, watch a little bit, go grab another day, maybe another year, watch a little, fast forward a little. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. All right, let's open with our daily devotional and a word of prayer as we do every day. Then we'll get into the markets. We're beginning a new topic today. Faith works. John 15, verse 20 is today's scripture. And I'm going to share it with you from the Message translation. When that happens, remember this. Servants don't get better treatment than their masters. If they beat on me, they will certainly beat on you. If they did what I told them, they will do what you tell them. Now, if you've got the King James Red Letter Edition, that was Jesus speaking. So, faith works. If you could gather all the people who ever lived, every person in history, James would stand out from the crowd as a man with a unique relationship to Jesus. The author of the biblical book bearing his name was also Jesus' little brother. Technically, James and Jesus were half-brothers. They shared an earthly mother, Mary, but James' biological father was Joseph, while Jesus was born of the Holy Spirit. He was the only begotten Son of God. Joseph was Jesus' earthly father, but he and Jesus were not biologically related. James and Jesus, however, were. So how's that for sibling rivalry? It's not hard to imagine the mixed feelings James must have had growing up with the world's greatest brother. Literally. Jesus was God's gift to humanity. But notice how James introduces himself. The book of James begins with the author identifying himself by name and as a servant of God and of the Lord Jesus Christ. That's James 1:1. He defined himself by his relationship of active faith and obedient service. This brother and servant penned an immensely practical letter centering around 3 themes. Number 1, trials, suffering, and difficulty can be expected. They never surprise God. Number 2, God desires progress, not perfection, as we follow Jesus. And number 3, riches and comfort will never satisfy the soul. James encouraged Christians to faithfully serve Jesus as their king. This encouragement would have been comforting and countercultural. When Jesus is Lord, we pledge our allegiance entirely to Him. This stance will necessarily put us at odds with our culture at some point. The Christian life isn't easy. Serving God through faithful obedience to Jesus won't equal health, wealth, and happiness in the earthly sense. In fact, Jesus promised that when we truly identify ourselves with Him, we will experience persecution. John 15:20. James knew it, the early church knew it, and it's still true today. And I fear about to become even more so. Join me in a word of prayer. Heavenly Father, thank you for the words of Jesus in John 15, where He tells us that if the world hates us, it hated Him first. Lord, we thank you for the example of Jesus, who endured persecution and rejection for the sake of righteousness. Help us, Lord, to follow in the footsteps of Jesus, knowing that as His disciples, we may face opposition and hostility from the world. Grant us the courage and strength to stand firm in our faith, even when faced with adversity. Lord, we pray for your protection and guidance as we navigate the challenges of living as followers of Christ in a world that often opposes your truth. Give us the wisdom to discern your will and the boldness to speak the truth in love, even when it's unpopular. May we find comfort and strength in knowing that you are with us always, and that your Spirit empowers us to overcome the world. Help us to trust in your promises and to remain steadfast in your devotion to you, regardless of the trials that we face. And Lord, we pray for those who persecute us, that they may come to know your love and grace and experience the transformation that comes from a true relationship with you. May your light shine through us, even in the midst of darkness, and may your kingdom come and your will be done on earth as it is in heaven. Thank you, Lord, for the privilege of being called your children. May we live lives that bring glory and honor to your name, even in the face of opposition. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Tuesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. I'll go ahead and spill the beans. Pretty flat, pretty sideways. I'm sure you already figured that part out. Currently, the Dow is down almost 4 points. The NASDAQ is up 40 points. S&P 500 is up 1.5 points. The Russell 2000, though, is up 21 points. just over 1%. In the commodity basket, crude oil down $1.33, trading 77.79 last. It's a drop of over 1.5%. Gold up $10.40, trading 23.53.50 last. Silver up 15 cents, trading 28.60 last. In the Asian markets at the close, Nikkei posted a gain of 176 points. Shanghai dropped 2 points. The Hang Seng fell 41. And in the European markets at the close, FTSE up 13, the DAX down 25, the CAC up 16. So that gave us a mixed day in Asia. It was a mixed day for the UK. And so far, or at the moment, it is a mixed Radio Tuesday here in the US of A. We've got 3 of the major indices in the green. The Russell by a full 1%. The S&P 500 by 1.5 points. The Nasdaq's positive by only 38 points, which, as you know, can go by like that. And the Dow in the red by 6 points, which you need 20 points to get your goal for the day in the Dow. So I think things remain pretty flat and pretty sideways until tomorrow when we get the CPI number. And that article I shared with you yesterday from Bloomberg, they're expecting wild swings in both directions, no matter how the CPI number prints. If it prints hot, well, then some see that as a sign of, well, we'll get an interest rate cut sooner. But that doesn't change the fact that the CPI printed hotter. It gets real confusing when you try to mine the minds of those who move the markets, both with the size of their trades and those who do it with the stroke of their pen or the clickety-clack of their keyboard. So the best bet tomorrow morning, be flat. Let the CPI number come. We'll see if those wild swings that Bloomberg predicts develop or not. And then as things settle down, the market returns to its normal rhythm. That's where you want to be. Just a suggestion. Okay, yesterday we talked about GameStop. It's still running. GameStop rose more than 60% today, adding to a rally that sent shares of the video game retailer up 74% Monday. Not 74 cents, 74%. 74% yesterday, 60% today. GameStop now trading at $67. Monday's move, in which the stock rose as much as 110% at one point and was halted for volatility several times during the trading session, followed the reemergence of Keith Gill, also known as Roaring Kitty, whose bull case on GameStop ignited the meme stock rally back in 2021. Hard to imagine it's been 3 years ago since that happened. GameStop shares have been flat year to date ahead of Monday's rally, but had risen about 60% in the past month. GameStop is now up over 180% over the last month, not including today's pre-market gains. The recent gains in GameStop were also accompanied by a rally in theater chain operator AMC. On Tuesday, AMC stock rose more than 100% before pairing gains. In an SEC filing, AMC also disclosed it issued approximately 72.5 million new shares, raising some $250 million for the company in the process. Other heavily shorted stocks rallying in pre-market trade on today include SunPower, up 90%, Beyond Meat, up 25%, and The Children's Place, up around 6%. In a note to clients on Tuesday, Nicholas Colas, co-founder of DataTrek Research, wrote, "This recent trading action feels like an echo of early 2021, when this account helped fuel a vicious short squeeze in GameStop." Colas noted that the move back in 2021 was quite a bit larger than what we've seen so far this time around. In January of 2021, GameStop rose 1,500% and then dropped, wiping out most of the gains. The pain short sellers endured during the original meme stock rally 3 years ago hasn't deterred bets against these companies, however. Short interest in GameStop has remained elevated since the meme rally. Data from S3 Partners showed with 24% of the float sold short as of Monday. That's 24% of the outstanding shares being shorted. But are they legitimate shorts or are they naked shorts? Remember, the broker has 3 days to borrow the shares to cover the position. Otherwise, it's an illegal trade. But no one seems to get prosecuted for that anymore. And in other news, Tesla, the electric vehicle, supposed to save the planet, right? Well, then how does this happen? Tesla has been sued by an environmental nonprofit that accused Elon Musk's electric car company of violating the federal Clean Air Act hundreds of times by letting its Fremont, California plant emit harmful pollutants. In a complaint filed on Monday, the Environmental Democracy Project said Tesla has, since January 2021, exposed nearby residents and workers to excessive nitrogen oxides, arsenic, cadmium, and other harmful chemicals, mainly through its paint shop operations. The nonprofit wants an injunction to halt excess pollution, plus civil fines of up to $121,000 per day per violation of the Clean Air Act. Tesla did not immediately respond to requests for comment. And I guess just to throw it in, we all know that 60% of the electricity generated in this country and the world, 60% plus if you throw in the world, is generated by burning fossil fuels. But somehow we become a big winner when everybody's driving an electric vehicle that runs off electricity that was generated by burning fossil fuels. Needless to say, I don't own any Tesla or any electric vehicle stock at all. Just to make that clear. All right, let's look real quick at Logic 247. That's our 24/7 around the clock E-mini alert service. Now, we had 2 gangbuster weeks where we were under 10%. Or I think last week might have been 10%. But we're up this week in a sideways market. We're in week 302. Over the last 302 weeks, we've issued over 16,600 individual handcrafted alerts. Now, this recap was done this morning by Valerie at 6:30 a.m. Eastern. She'll update it as appropriate this afternoon, probably again this evening. At the time of the recap, we had issued 15 alerts so far this week since the market opened Sunday night. There have been additional ones issued today. At the time, we were still waiting on 4. That gave us 11 actionable alerts, of which 3, 28%, would have been stopped out based on market structure, and a very simple process that we teach all of our passport holders in their one-on-one mentoring sessions. Over the last 302 weeks and 16,600 plus alerts, what we've averaged on a weekly basis is 20% or less of the alerts being stopped out, again, based simply on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, long before we had Logic 247, we had our original alert service, the concierge trade alerts. And they're a little bit different in a couple different ways. With the Logic alerts, you get an initial entry price, then an initial target, followed by additional targets, and then a final trade to target. The purpose of the alerts is not for you to just trade those and not worry about learning how to trade. That would be a horrible mistake. The purpose of the alerts is to help you learn how to read the chart. When a Logic alert comes out, even if you don't trade that market, go to the 30-minute chart. Draw a line in the sand, a horizontal line, at the entry price, then draw another one at the initial target. That right there is good for your goal for the day. And then any additional targets, draw a horizontal line at that price, right up to the final trade to target, which will be the weekly trading zone. It'll be the zone above if it's a long, the zone below if it's a short. Now, where do those additional targets come from? By simply looking left. If it's a long alert, you're looking left for previous swing highs, which you can use as targets or obstacles. And they can be both. On a short, looking left for previous swing lows, which can become support. Again, they can be targets or obstacles. On the alert itself, it reads potential resistance. That would be on a long, or potential support. That would be on a short. If you'll do that for a couple weeks, pretty soon you'll start to see the windows of opportunity that exist in the market based off the 30-minute roadmap. And then you simply use your smaller time frame range chart to trade those windows of opportunity. Once you get the handle on that, then you step your game up and use the CTAs. The CTAs don't come out around the clock like the logic alerts. Futures trade around the clock. We have traders around the globe. So a logic alert could come out at 2 a.m. or 2 p.m. as opportunity presents. The CTAs are published as a static report shortly after the Globex open. So last night, the Tuesday session began at 6 p.m. Eastern. 20 minutes into the first 30-minute candle, this report was published. Okay. Now, first thing you do when the report comes out, go to the 30-minute chart of the markets you trade and make note on the chart where price is at the time the report comes out. Then draw a line in the sand at the long target, a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. The BBC is simply the green line you see on my charts. It stands for bull, bear, cross. Price crosses above the green line, we're bullish and anticipate higher prices. If price crosses below the green line, then we're bearish and anticipate lower prices. Always relative to whatever time frame you've applied the BBC. As I said, in the case of the alerts, with the logic and the CTAs, it's always the 30-minute roadmap chart. This is where you start to look left yourself to spot potential obstacles, previous swing highs and swing lows. And you start to learn how price behaves at a weekly trading zone. That's important because price is always trying to reach a weekly trading zone. If price is above the 30-minute BBC, it's trying to get to the zone above. If price is below the 30-minute BBC, it's trying to get to the zone below. We've published the zones every week for our members since December 14th of 2009. So we're closing in on 15 years. They come out Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They do not change in any way whatsoever. Other than that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. So let's take a look at the daily chart. Okay, we started talking about this yesterday. Step line, crossing blue and climbing. Now we've got 1, 2, so forth, 3 failed attempts, if you include today, to trade higher. Now last week we were talking about this previous bearish cross, and that area, and that's what it is, an area, would likely be potentially good resistance. So far it has been for 1, 2, 3, 4 days. We've spiked it a little bit, but each day ended with just a wick to the upside. That in and of itself is bearish. And we can see that the step line is crossing blue and climbing. If we close where we are today, we've had 2 dojis in a row, Friday, Monday, today's Tuesday. We end up with another doji today, then I would say when we open tonight, that will complete the cross of the step line to the right side of blue and climbing. When that happens, we then anticipate a retracement to the BBC. Price always reverts to the mean. In our case, the mean is green and it's called the BBC. As you can see, bullish above it, bearish below it. Now tomorrow, we talked in depth about this yesterday. CPI numbers. They're being closely watched. And from the Bloomberg desk, they expect wild swings in the S&P 500. No matter how the print comes out, but if it's hotter than expected, then really wild swings. So, keep that in mind. A doji is a sign of indecision. The reason we look at the daily chart for a couple minutes before we go to the smaller time frame charts, and I recommend that you do this no matter what futures market you trade, or stock, or crypto, or Forex, or ETF, because the institutional traders, the daily, weekly, and monthly charts, the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts, has to do with account size. You see, the institutional traders trade in such size that they literally move price. So by spending a couple of minutes with the daily chart before you drop to your smaller time frames to actually start trading, you can usually get an idea which way the wind is blowing, except when you have a doji and 3 dojis back to back. Now, we don't know that today is going to close as a doji, but that's where it is right now. Okay, so 3 sideways days, but tomorrow's supposed to be a wild one. We'll see if that pans out. So again, it doesn't matter what it is you trade. Spend 2 minutes with the daily chart. See what the deep pockets are doing. Look over their shoulder. Then go to your smaller time frame with that knowledge and trade what's in front of you. Here's the ES. Pretty flat. Here's where the vertical line separates today, Tuesday, from Monday. When price rallies up to a weekly trading zone, we expect resistance until proven otherwise. Price drops to a weekly zone, we expect support until proven otherwise. With the exception of this little spike below yesterday afternoon at 1 o'clock Eastern, price slid sideways into the close, and then when the market opened last night, price was just trapped between resistance at the BBC and support at the weekly zone. The zone's 52.42/43. And then as we approach the London Open, we got a little bit of movement. Probably enough to get your goal for the day if you're trading that time of day. Now this is where we had news this morning. I think it was the PPI today. It's a CPI tomorrow. Price took quite a drop. Moved more in that 130-minute candle than it's moved all week. But then it popped right back up as if nothing ever happened. We get above the BBC and we make a run to the long target. And we come just shy of hitting the zone. The zone's at 61/62, and we made it up to 60. We missed it by a point. Yesterday, we overshot it by a couple points. The zone is 61/62, and the high we put in yesterday was 64. So overshot it by 2 points. Overshot this one by a little bit. This one we overshot, but this was a huge red candle all the way down. Everybody in town getting short, getting short, getting short, getting short, until bang, they wish they hadn't got short. Resistance will always send the market looking for support. We're at support. That's going to send the market looking for resistance. Again, the zone is 52.42.43, and the low of this current candle is exactly 43. Now we've gotten below the BBC. So if we take out this low right here, then 52.37 down to 33, that would probably be a pretty nice 4-point window of opportunity. And if it keeps dropping, you'd stay with it right down to the next zone. On the Dow, pretty much the same, sideways into the close yesterday. Last night, sideways when we opened. Finally got above the BBC. Almost made it to the zone overhead. Then we got that same 8:30 rush to the downside where we hit the short target, just like we did on the ES. And then popped right back up and hit the long target. And bearish cross that leads to an extended move. The first time price revisits that area will almost always be good resistance. And it was. That resistance sent the market looking for support, which it has found for the last hour and a half at the weekly zone, 39,540/45. Now it looks like we're about to get a bearish cross where the red line drops below the green line, and if we do, then we may get a nice window of opportunity from roughly 39,500 down to 430. That's 70 points. It only takes 20 points with the Dow to get your goal for the day. Now the Russell was a bit of a wild child out of everything today. We opened last night right at the zone, and we just hugged the zone for hours till the London Open, really. We got a leg, tracement, and a leg that took us to the target, through the target. We hit the zone, and then that 8:30 news came out, sent us all the way down to and through the short target. But we immediately bounced right back up, just like the other markets. And when I gave you the numbers from around the world, remember, the Russell was the only one that had substantial gains on the day. It was up about 1%, while the others were also ran. Now the step line has crossed blue and climbing, so chances are we're headed back to the BBC. Price always reverts to the mean. Pullback holds more often than not. So if it holds here, now it's really support times 2 because we've got a weekly zone and the BBC. So if this pullback holds, then we get another leg to the upside. If it doesn't hold, then we've got this nice area here to trade to the short side. So unless the Russell just comes down to the zone and consolidates into the close, as we've seen the other markets do yesterday, then there should be some kind of opportunity there this afternoon. NQ. We open below the BBC, but we don't really do much in the way of moving. You have to look left and realize that these areas here are going to be potential support, and they were. Then as we approach the London Open, we got a leg. It was enough to get your goal for the day. Then blue and climbing turned to red and falling. Out comes that 8:30 news. Down we go to the short target, all the way down to the next zone. But by the time the 30-minute candle closes, it's as if it didn't even happen. So we get above the BBC, make a run up to the long target, get to the zone, we consolidate. When price reaches a weekly zone, 70% of the time it will be consolidation, like this. 20% of the time will be rejection, like this, like this, like this. 10% of the time, slice. Crude, here's where we opened. We attempted the long target. We moved far enough to go for the day, but we didn't quite touch it. And then it just rolled over. We had a leg and a retracement and a leg. And that leg took us through the zone, through the target, down to the zone at 7765/7770. Support will always send the market looking for resistance, which it found at the BBC. Resistance will always send the market looking for support, which it has found for the moment right here, just above the zone, just above the low of the session. But as you can see, it's already ran into resistance at red and falling. This was a green candle all the way up. There's still 11 minutes left in the life of this candle. We'll see what happens. On gold. Here's where we opened last night. Had a leg to the upside, a retracement, another leg, consolidated at the zone, pull back to the BBC, and then a run to the long target. And we ran out of steam at 2362.9. But we've pulled back to the BBC and the zone. Support times 2. If we can take out this high right here, be aware of this high right here from yesterday. Let price get up to about 2368 and trade it up to 2370. That would be $200 per contract traded. We'll pick up with silver. Still got 2 more markets, silver and the euro. Michael's here, so he's going to give us a recap of what happened in the live training room. Then we'll go live on TradingView for 30 minutes. Then I'll finish up the recap. We'll wrap up with our good word for the day. Looks good.
All right. Here we go. All right, let me bring this up. There you go. Good. Just make sure one more time. There it is. Yeah. Okay. Good afternoon, everyone. Good afternoon, everyone. Today is Tuesday. It's Tuesday, the 14th day of May, 2024. And now, if you have not taken a free trial with us, go here to mytradingiq.com. Click on this purple button right here. When you click that purple button, you will be sent to this registration page, where all we ask for is your name, your email, your phone number. Down here at the bottom, if you have Ninja, give us your machine ID. If you have a TradingView, give us your login ID. There is no credit card required. You notice that? No credit card required in there. It says it right here. No credit card required for the trial. Sign up for the trial. Give us all that information. We'll get your indicators indicating for you. Okay? You want to get those indicators indicating at the beginning of your trial. All right. Now, let's see. In here, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. I ended up doing the lesson plan for a lot longer than I normally do today. It was like over an hour today I did the lesson plan. So I didn't get that many trades. I actually got 16 trades in, but still, I should have traded more. Anyway, well, if I was going to continue for the whole 2 hours, I should have traded more. I was done after 12 minutes. But if you can read the spreadsheet, you can read the CFTC risk disclosures down at the bottom. Today we made 32 ticks on the NQ. We lost 5 on the YM, and we lost 2 on the ES. I put us at 110 on the morning session. Today it took 12 minutes and 3 trades to get to $2,380. At that point, we were up 34 ticks, I think, on the NQ. So we ended up with 32, but we were back and forth quite a bit. We're up as high as 72, I think, at one point, and then we stopped out a few times, and then we made some back, and so it was back and forth a little bit over there. We'll get into that. Total of 16 trades. So on the month now, we're at $3,290. Over 10 days, averaging $329 per day. On the year, we're at $37,025, averaging $406 with 1 contract each morning. if you were to quit trading, when you get your goal for the day, so far this year, you would have had to work just about 33 hours. And you would have been averaging, if you started the 24/20 blueprint in January of this year, you'd be averaging $1,107 an hour. If you started in January of last year, like me, you would now be up to 17 contracts and be averaging $5,890 an hour, doing everything just like I did. Okay? Okay, that's it. Let's get into the trades. Yes, for anybody who's in here who wasn't in the morning session, the TIQ Context PP, the new version is in, okay? The new version that has the purple arrow, and it's also got all the new alerts over here. Okay, that version is in, and we will talk about it in a lot more detail, but if you want to add an alert onto a chart, just highlight the chart like that, go up here, click on alert, go in here, choose what you want to add the alert on, the TV trades, then choose what alert you want, buy, sell, whatever. If you want to add a buy alert, you click buy alert, choose once per close, and hit create. Now when you go in here, I have it only set to play a sound right now. You could have it notify in the app on your phone that will buzz your phone if you have the app running on your phone. You could have it show a pop-up on your screen, whatever you want it to do. Like right now, if I did the green arrows right here on the NQ, I don't think I have a green arrow along, do I? I think GL, I do have a green arrow along. Oh, it just did it right here. Here's the alert it just triggered right here. So that if I had all those other things on, it would have popped it up. It would have made it on my phone and all that stuff. But you see, it just popped this alert up right here. So that is available to everybody now. All right. All you have to do is, if you have the context, if you have access to the context PP, all you have to do is go out, delete whatever context PP you have on your chart, and just add a new one, and it'll be active for you. Okay. Is Renee in here? Renee is not. Okay. Anyway, let's get into the trades. On the YM today, we had just a couple of trades. That one and this one. This one right here we stopped out on. And that, well, it was just minus 10 ticks right there. We didn't get that many trades here on the YM. We went long on this one. We got 5 ticks back, so we ended up with -5 on the YM. There was one more right here that I didn't get that went up to the zone, and one more right here that I didn't get that I wouldn't have taken going into the zone. One more right here that I didn't get that would have stopped me out. Those are all the blue arrows. The purple arrows, again, are available, and the purple arrows can happen in a no trade zone. Okay, they don't look at the slingshot primarily. You don't need to come out of the overbought or oversold for an arrow, for the purple arrow. Okay. In here during the break, there was one more blue arrow here that was just enough to get break even, and that was it. So the YM, I used it for the lesson plan today. Had some decent trend earlier in the day, but it petered out after a while. We had the PPI come out today, and everything, it was a huge miss. All the numbers were a huge miss, and they're saying they're all green because the producer price index, what it costs for manufacturers to produce goods, is way higher than what they thought it was going to be, and they're saying that's good. It's way higher than what they thought it was going to be. Let's go look at that. Let me just show you right here. If you go to more, go to economic calendar, and here Tuesday PPI, USD PPI. Let's do the month over month right here. The high impact one, month over month. They're expecting 0.3 and they got 0.5, so way higher. It's better than expected result for the value of USD currency. Yeah. Okay. Yeah, that is not necessarily true. I mean, what that means is it costs the producers more to make stuff, so that's going to come back to us. CPI is coming out at the end of the week. That's the ones for us, and that's going to be way higher, and they're going to say that that's good, and you know that it is not. Anyway, getting that rabbit hole. All right, so the Russell here, you can see almost the whole day on the Russell right. No, you can't. You can see just this part of the Russell right here. All right, so our first trade on the Russell right here was break even this morning. And do we have anything else? Nope, we just had the one Russell break even trade. That was all we had on the Russell this morning. There was a blue arrow there, a couple of blue arrows there. That one would have stopped you out. These would have gotten you something back. during the break, there was this one and this one. This would have been a good trade. This one, very close to a stop out to the tick right there before it went down. Depends where your entry was. But you know, after the news this morning, the markets, if you look at the big picture, and I'll show you that in a few minutes, the markets weren't all that active. Right, this is the yes. The whole thing on the yes is in one screenshot right here. Like our whole morning from 9:30 to 12 or 11:30. Our first trade on the yes was right here. We had a break even. Our next trade was right here. We stopped out. Our next trade was right here, right at the end of the session, and we picked up 8 ticks on that to get us to -2 on the yes. During the break, there was a trade there, there, and there. Just look at the blue arrows. When you have a blue and purple together like that, those are blue arrow trades where the outer band is in favor of the trade. All right, so those are really, really high probability. The outer band is in favor of the trade. The slingshot's in favor of the trade. Everything's in favor of the trade. Short and long term, everything's in favor of the trade when you get the blue purple like that. Okay, so I ended up with -2 on the ES. Now the NQ, let's go all the way back to the beginning. All the way back to the beginning. Here we go. Here we are. All right, another blue purple one. That was our first trade of the morning on the NQ. We picked up 4 ticks on that one. Picked up 30 ticks on the next one. That's where we got the goal for the day. We were at 34 ticks at that point. Then we picked up another 8 ticks on this next one. Got us to 42. Then we picked up 30 ticks on that one. That got us to 72. And then we had a few stop outs here. We stopped out there. That brought us down to 52. Then we had 10 there. Got us to 62. I'll go over the purple arrows in a minute, okay? Then we went from 62 to 64, so we got 2 ticks on that one, and then I stopped out. This was my fault because I didn't move the stop fast enough. We went down to 44, and then we stopped out again. This was just a valid stop out. Got me down to 24, and then I worked my way back from that. I didn't get this blue arrow here, but I did get a couple of ticks on that. It got me up to 28. And then I had a break even there, and it was toward the end of the session. I started the lesson plan right about here at 10:15, and I was still going in the lesson plan all the way to the end of the session. I picked up 4 ticks there to get me to 32. That was in the middle of the lesson plan. I picked up those 4 ticks, and that was it. It was a long trade here that I wasn't going to take going into the zone, a short trade here that I was going to take at the zone. This is during the break-in here. There was a blue arrow there, a blue arrow there. This one would have given you something or a break even. This one would have stopped you out. This, the purple, blue, purple, that would have given you a break even right there. This would have given you some profit. And this would have given you some profit. And that was it. Okay, that was what we did today on the in the room. So let me move things around here a little bit. Go and YouTube. I think I have it running, don't I? I don't have it running on this one. YouTube.com CFRN. I'm gonna go out there and open that stream up. And here it is. Okay, so we got Anjum straightened out yesterday with the questions that he had yesterday in the live stream, the YouTube stream. There's another arrow and another alert trigger right here. Green arrow long. Okay. Okay, so if you have not taken a free trial with us and you want to go here to mytradingiq.com, click on this purple button right here. That is going to bring you to this registration page. Right on this page, all we ask is your name, email, and phone number. Right, no credit card is required. Down here at the bottom, we ask for your machine ID and your TradingView login ID. If you have those, give them to us so we can enable the indicators for you. Okay, if you don't have those, then well, we can't enable the indicators for you. That's all you need to do to take the trial. All right. Results today, we're only up $110 a contract, but I only traded a little while today. We did get the goal. We were up $170 a contract, I think, when we got the goal. And we got that out pretty early on after 12 minutes and 3 trades. And that is why you should quit trading when you get the goal for the day. I went through this morning. You know, if you traded with the one contract, but you traded the whole session, you traded 182 hours so far this year. 182 hours, and with the one contract, you're at $37,025. If you did the 24/20 blueprint and you added one contract per month, you only traded 33 hours so far this year. 182, 33. Doing the 24/20 blueprint in 33 hours, you're at $36,507. So just about the same thing, but 33 hours. So this is like $200 an hour. This is $1,100 an hour. It doesn't take much to see that this, if you can do this and stick to the plan, that is the way to go. All right, let's get in here. Now, I said that, let me see, there aren't any questions in here yet, but I said that I was going to go over the purple arrow, and I am. Let me also bring up this other thing that we had going here. Here it is. All right, so I don't see any questions coming in here right now, but I want to go over the purple arrow. Okay. So the purple arrow happens when, oops, I clicked on the wrong one. Well, it doesn't matter. I can show you on this one too. We have a purple arrow. Okay. Which one is this? The Russell? We didn't have that much happen on the Russell today. Let's go here to the ES. Okay, so the purple arrow happens when price pulls back to the ribbon and the black line is in the right color and the outer band is the right color. Okay, size moving to break even after 8 ticks for the NQ. Are there any guidelines for trailing the stop and locking in profit? That's a fair question, Joseph. First, let me answer your question by going over here to the trade rules page. Okay. Now, there's going to be something else that's in Thursday's lesson plan that's going to help you with this. It's down here, right here, the trade exit, right? First, you look left for the swing higher, low for area support or resistance. And then you learn to read the DOM to find potential numbers of prices searching for as part of the training you receive once you're a partner. That's part of it. Knowing when to lock in more and trail your stop close. But what I do typically is I trail the stop with the NQ. You're asking just about the NQ. This is going to apply to most things, but as far as the speed with which I trail the stop, because the NQ, it runs so fast, and because it's 4 ticks per point, I trail usually 4 ticks at a time with the NQ. Like I'll bump it to 4 ticks, then another 4, and then another 4, and then another 4. So I do a point at a time with the NQ. That's usually how I do it. Okay. Now I have the 30 tick target on there that I know you hit this morning a couple of times. And the 30 tick target, it's not just some random 30 number, all right? For the NQ, 30 ticks is, well, 32 ticks is 8 points. So 8 points is usually what you get in a leg. You know, leg length is usually about 8 points. You know, in a good trending market, this is the ES, but in the NQ, in a decent trending market, 8 points is about what a leg length is. Okay, 32 ticks. So 30 is just a nice number that's less than 32, and we hit 30 a lot. A lot of times we hit that 30 number, and I'm happy taking 30. And the risk reward ratio is good. When you're risking 20 to get 30, that's still good. There's a lot of times that it won't make it to 40. Okay, so 30 is just a good number, and it usually hits it. And then it also is far enough out so that you can trail your stop and make money trailing your stop. So back to answering your question. Like, let's say we were trailing the stop right here. We got into this trade and it started moving up, right? What it says here in the trade rules is look left. First, look left, all right? The prior swing higher, low, support, resistance. It's right there. Now, you can add some stuff onto here if you want to. It may trigger that for you right there. I'm not exactly sure it's going to be right there. No, it wasn't. It goes down a little deeper than that. This puts the target lines on here. But so when you get into this, you look left. Now the distance from here to here is easily 30 ticks, right? It's 29. Let's just say it's 30 down to say 21. 30 down to 21. It's 9 points. 9 times 4 is 36. So you get into this and you're anticipating it's going to get through this level. Remember everything that I say in the morning over and over again. The way that the markets work. You know, they go down, then they go up, then 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 they go down. But every time they go down to continue the trend, they have to exceed that, right? So that's what you're totally anticipating that it's going to do that. So when it starts running in favor of that trade, first you bump your stop to break even after you get 8 ticks in profit, so you're not in a losing position. And then as it starts running down, I bump it to plus 4 ticks, and then after it gets like 12, I bump it to plus 8 ticks, and after it gets 16, I bump to plus 12. And I try to do it like that, okay? As it gets down to the swing low right here, I try to trail it a little bit closer, because right there is where it should pull back, and I don't want to lose anything on the pullback. If it's going to stop here and not continue the trend, that's where it's going to pull back and completely change directions. Okay, so I trail it a little closer when it gets down here to the swing low. Now, in Thursday's lesson plan, I'm going to teach you how to read the DOM, so you may overlook this. You may look beyond here because it might be something good down here in the DOM that says that's where the real target should be. And you won't know that until it gets down here, okay? Now with the NQ, you can't really read the DOM in the NQ because it bounces around so fast. But for the other markets, it's useful. For the NQ, it's not as useful. The leg length, which is in tomorrow's lesson plan, becomes useful in this case with the NQ, okay? I don't make it more than 30 ticks, right? The only times I get more than 30 ticks is if I mess it up and I don't have a target on there. I usually leave it right at 30 ticks. I mean, you can make it whatever you want, but I leave it at 30. I'm happy getting 30. I'm doing a lot of things in there in the morning, and having to manage that part of it would be a lot for me to actually do it and do it well. So I'm happy taking 30 ticks anytime I can get it. If you're just trading one market though, and the leg lengths, which we'll get into tomorrow, you would see how you would expect more out of a trade than just the 30 ticks. Okay, but that's in tomorrow's lesson plan. But, like in this case right here, well, I'd be expecting, if we call this the leg length, I'd really rather use this right here. From here down to here is what I'd rather use for the starting leg length right there. That first leg of the move. And that's what I'd expect out of a trade. Okay. And then I'd expect that out of each one after it. And if it doesn't do it, if it doesn't make that leg length, then I expect it's going to turn around and go sideways. And I'm not really interested in trading anymore after that, not in that direction. Okay, so in this case right here, the target would be more than 30 ticks. If you got this right here, I don't know what the top to bottom is, but would you say right here it's, let's just say it's 30. And the bottom of this leg length is down here at 13. So let's just call that, we'll call it 14. 30 down to 14 is 16 points. So, it's a bunch more than 30. So, that's in tomorrow's lesson plan. I'll teach you all that stuff tomorrow. But yeah, to answer your question, yeah, I mean, you can make it more than 30 ticks if you want to. And with the NQ, the leg lengths come into play more than anything else. With swing low, that's the first thing. The things that are obvious, right? The obvious things is the swing low, and then you got to use the leg lengths because the DOM is really useless with the NQ. It used to be pretty good. When you see it like this and it's consistently showing you 10 things out like this, then it's okay. But most of the time it crunches it all up and it doesn't end up giving you all that you need. And this is just with my DOM. It's not this way with all DOMs, I don't think. I don't think the NinjaTrader DOM is like that. But you have to have depth of market. You said you use NinjaTrader too, but I don't know if you have depth of market with NinjaTrader. But I don't know if you pay for depth of market. I know Ninja has it, but I don't know if you pay for it. But those are all different things that go into how you trail your stop. The easy answer is I like to have a long distance between the entry and the swing high or swing low because that gives you more room to run before you hit your first area of support or resistance. Okay, I like that. And I trail my stop 4 ticks at a time until it gets down there, and then I trail it right up close because I expect it's going to pull back when it gets there, have a little bit bigger bounce when it gets there. Like right here, it went sideways, a little bit sideways bounce right there before it went down the rest of the way. So yes, that is how I trail my stop. Okay. that answer your question? That was a lot of talk. I was getting into the purple arrow, I think is what I was trying to show you guys. Or starting to show you guys. Okay. But there'll be more stuff tomorrow and Thursday in the lesson plan. Tomorrow is going to be the leg lengths, and Thursday is going to be reading it down. And both of them are really simple concepts, but I can say it, but then it's different when I actually do it and show you. All right. So the purple arrow, you can see the purple arrow can obviously happen in no trade zone, and the purple arrow is showing you when you pull back and hit the ribbon, when the black line stayed in the right color and the outer band stayed the right color. Okay. When the black line stayed in the right color and the outer band stayed the right color, that's when you get the purple arrow, right? It pulls back to the ribbon. The one other condition that I made on it is that this has to be in favor of the trade. Okay. You won't get any purple arrows where that's not in favor of the trade. That's the only way that the slingshot comes into play. It doesn't come into play as far as the other ones. You have to come out of the overbought, you have to come out of the oversold to trigger an arrow. In this case, it just has to be in favor of the trade. It has to be in the right direction. It can't be in the wrong direction. Okay, and that's what the purple arrow is all about. Now, the other thing that I wanted to show you is the alerts. I think I already did show you, but I'll show you again. Now, these alerts are for people who, you might have your charts running and you might be able to or might not be able to keep your eye on the charts all the time. If that is the case, if you can't keep your eye on the chart and you just want to have some sort of an alert, let you know when an arrow is triggering, or in this case, just when an arrow does trigger, right? Do I give warnings on this? I don't think I give warnings on this one, right? This is just when it does trigger or doesn't trigger. To put an alert on, all you have to do is go up here and hit alert, right? And then when you come in here, choose what you're giving an alert to, TV trades. Then choose the alert that you want to give, a buy alert, sell alert, buy alert, sell alert. No, I'm sorry, not TV trades. Sorry, that is TV trades. I don't want to do it on TV trades. You want to do context PP. Context PP, then the purple, green, or blue arrow, long or short, whatever alert you want to do. Like if I want to do a purple arrow long, then I do that. Click once on bar close. You want to do once on bar close. And you don't have to add anything in here, but you can. Like this is the NQ15 range. I can say NQ15R P long, or RP long's not good. Let me do this. 15R purple long. Okay, and then I'll hit create on this, and now it's going to pop up over here. Now the way that I set that up, when it shows up over here, oops, sorry. The way that I set that up, this one right here, it's only going to give you a sound in my headset or sound on my computer is what it's going to do right here. It'll also display over here. It'll always display over here. The alert log will always display over there. But it's not going to give you a sound on your computer if you leave it like that. You can have it send you an email if you want to. If you work on larger time frames, sending emails is not really efficient if you're day trading. But you can have it notify you in the app. You can, and that if you have the app running on your mobile phone, it'll buzz your phone. My phone's been buzzing all morning because I made a whole bunch of them this morning, and so my phone's been buzzing all morning. It's buzzed a couple of times since I've been talking, and that's how simple it is. That's how simple it is. You just click here, you click alert, choose what you want to put the alert on, context PP, choose the alert you want to put on, choose once per bar close. You can name it if you want to, you don't have to. It'll give it, it'll give it the name like this right here. If you want to, if you do name it, it's the bold up here on the top is what the name will show up as. Okay. If we look at those alerts, like this one right here, green arrow short is what that is. And if we look at it here, it's called GAS, green arrow short. And it gives you the symbol and all that stuff, but if you want the symbol to be in bold up here and not down here below everything, you can put it right up there at the top, and it'll give you the symbol name as well. Okay, just makes it easier for you to see. Like this, if I had the purple arrow short on, I have the purple arrow long, but if I had the purple arrow short on, it would have just given us a a purple arrow short alert right there. I mean, I'll create one. I don't know if we're going to get another chance to see one of those, but let me put a purple arrow short on here. It's context PP, and we'll do a purple arrow short and alert once per bar close. And let's do a pop-up, notify in the app, and that's it. That's enough. I'll create that. Okay, so now it's over here, the purple arrow short, and I didn't actually name it. I can name it here. NQ R purple short. Okay, so once per bar close, notified where I want to be notified, I'll hit save on that. Okay, so there's a chance it could happen again. It might not. You see the last three of them were all shorts. This one, and this one. Every one of them so far has done something. Again, what the purple arrow is showing you here is that the outer band is the right color. You pull back and touch the ribbon and the outer band is the right color. It doesn't care that you're in a no trade zone. Okay, it doesn't care that the outer band might be flat. If the outer band is the right color, it doesn't matter. No, if the outer band, that's all that matters. If the outer band is the right color. Be completely flat in a no trade zone, and you'll still get the purple arrow. Okay, this is the right color. It's looking at the minuscule differences between each bar. Like well, these are actually like right in here. The difference between here and here in the outer band, between the long outer band and the short outer band. You see all that stuff right in here. So if you do right here, do long-term outer band, just watch that from bar to bar. So that one right there, it was 39.91, and that one right there was 39.78. So there's barely a difference, but there is a difference. Okay, 91 down to 78 on the outer band right there. So that's why it's red. Okay, and that's why you get the indication. Now, in here, the purple arrow, if you look over here, the SHP arrow, it's 0 when it's not showing at all. It just showed again, and it just popped up on my, that was a Microsoft one that I have going. Sorry. That's a Microsoft alert that I have going on another computer right now. But if you have the alert running, you don't have to be looking at it. If you have the alert running somewhere, like I have that running on another computer, I have a Microsoft alert. And it just alerted me that there is a possible buy soon is what it said on Microsoft. So, if I go here to Microsoft, go out here and look on this, MSFT Microsoft, then it's on a 5-minute. When it loads up, there it is right there. It's saying possible buy soon. The possible buy soon triggered from this bar right here. Okay. Now it's not in this account that it said that, but that's what it's saying. So if this bar closes up, then we're going to have, there it is, a possible long soon. That's what it just triggered on my phone. If this bar closes up, then we're going to have the long, and it'll trigger that there was a long. Okay, this is from another account on another computer. So I guess the lesson from that is that these alerts are persistent. So you can set them and forget them, and you're going to get, well, they're not going to forget that you set it. They're going to give you alerts wherever you are, however you set it up to get the alerts. They're going to give it to you. Like right now, you see I just got off that chart that I was looking at. If we had any more alerts triggered from that chart, from the NQ, it would give them to us right now. Okay, and that is all inside the context PP now. So I don't have the context PP on this chart, but this is TV Trades. Again, TV Trades, there's a webinar this afternoon at 3 p.m. Go to targetviewtrades.com if you want to see what that's about. But here, see, we didn't get any more alerts here on the NQ. So, and I can change this to something else. I can change this to like a 7 range. Okay. Now when that loads up, we might get arrows, and we might get. See how I had a green arrow and a blue arrow and a purple arrow. Now I have alerts for every kind of arrow here on the NQ. But if I get them on this time frame right here, visually, we get them here on this time frame. These are not associated with this chart anymore. All right, these are associated with the chart that you created them with, that I created them with. So if, like for this purple arrow short, well, with context PP, if you have a shorting opportunity, it's on a 15 range purple arrow short that has to happen on. It's the 15 range. What it says down here is the chart that it has to happen on. Okay. So right now, if I get any kind of an alert on this right now, it's not going to trigger anything. When you drop down the time frame like that, you got to change the sensitivity so you're not constantly in no trade zone. Okay, like that. And now we'll see. We'll see if we get coming up right here, we might get some kind of an alert off the ribbon right here. All right, does everybody get that? Everybody understand all that? All right, we didn't end up with an alert here, and we didn't end up with it. Well, we didn't end up with a trade here, and we didn't end up with any kind of an alert here. But if we give this a minute, it might turn into something. Does anybody want to see anything else? Does anybody want to see other charts? I haven't looked to see what Bitcoin's doing today, but it should have gone down some from yesterday. It did. Perfect. That's exactly what I was expecting. Did we get the up close on that? It hasn't triggered the alert yet for the up close. It hasn't told me anyway. Microsoft 5-minute. Oh yeah, we did right there. No, it's still not done. That bar's not closed yet. So when that bar closes, it'll probably trigger an alert. And if it does, I'll show you what it looks like on my phone from the mobile perspective. Okay. So you can see what that looks like there in a minute. Well, that bar's going to close, so it's going to take, it'll close here in just about 5 or 10 seconds. That bar will close. All right, we still don't have anything triggering here yet. There it is. Okay, the bar just closed, and I just got it on my phone. So here, I'll show you what that means. Hang on. Let me send this let me send it in Telegram. This, and we'll send it there. Send one. Okay, hang on, let me go get it over here now. And I'll show you what that looks like. Here it is. This is what it looks like on my phone. This is the alert on my phone. On Microsoft, buy condition met now. And the alert on Microsoft possible buy soon was 5 minutes ago. So you had 5 minutes to get ready for that trade. And then you were able to place it right there. Had an alert on Apple 15 minutes ago. This is what it looks like on the phone, okay, on the mobile. And yeah, so that's that. All right, so you see how we had a blue arrow right here, but we did not get an alert over here? That's because this is a 7 range, and the blue arrow long was for the 15 range. Okay, we haven't gotten another alert from the 15 range yet. Okay, so that was a pretty cool explanation right there, wasn't it? That gives you that right on your phone. And that happened right here in this real-time explanation right here. Got the up close right there, gave you the alert right there. Gives you the buy with the stop, long entry with the stop. How big the stop is, about 49 cents. Risk reward 4.7 to 1. So targets, all that stuff, all you need. Now let's go back to the 15 range here and see what we have going on with the 15 range. Okay, we don't have any opportunity here yet for a trade on the 15 range. It's going to have to come all the way back down and test the ribbon. Now it could do that in a minute or two. That's all we have left is a minute or two. But Verizon Wi-Fi. That's what my phone says. Which Wi-Fi am I on? Let me check that. I'm curious because, you know, I got that fiber optic thing, and that's not the Verizon one. Nope, I am on Verizon. Actually, I'm not on Verizon. I should be on T-Mobile. My phone should be on T-Mobile. It shouldn't be on Verizon either. Verizon Wi-Fi. That means it's not using. Doesn't matter. All right, so I just got an alert on something else that was a possible buy soon. What was that one? That was the ES. ES has a possible buy soon, is what it said. So I don't know what chart that's coming from. It's not from over here. I don't have any alerts on the ES on this one. I think it's on a 5-minute chart. Anyway, any questions, anybody, about any of this stuff? And it left. So we didn't end up getting an alert from here. Sadly, I didn't turn the alert on for the purple short until after I gave it. But you can see what it did with the other ones. And you know, that's what you do with your context PP. If you want to set the alerts up so you're alerted, let you know, so you don't have to stare at the charts all day. Let you know when a trade's coming up or a trade happens. Okay. All right. So let's go here again. If you have not taken a free trial with us and you want to, go to mytradingiq.com. Right here is a sign up for your free 5-day training now, 9:15 to 11:30. Click on that. There is no credit card required for the trial. It's going to bring you to this registration page. Just fill this out. At the bottom down here, we ask for the Ninja Trading Machine ID if you have it. And if you have TradingView, give us a TradingView login ID if you have it. All right. Give us that information so we get your indicators indicating for you. All right. That's it. That's all you have to do, guys. All right. With that, I can pass it back out to fabulous James, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
I am. Recap of the morning session.
Today, let's see. I know I had this written down somewhere. Today, it took us 12 minutes and 3 trades to get to, hang on, 12 minutes and 3 trades to get to $2,380 this morning.
Good job.
Thank you very much.
Okay, guys, we'll wrap up this recap here as well. We're on silver. Still got 2 more to go, silver and the euro. Here's where we opened last night. We consolidated at the zone. That's what happens 70% of the time when price encounters a zone. Then it only takes 2 pennies to get your goal for the day with silver. So from here at about 28.54, at 28.57, that would be 3 pennies. It'd be $150 right there, just in that one little candle. Then we got to pull back to the BBC. The pullback holds more often than not. That sent us right up to the target, which was yesterday's highs. Then we continued higher until we got to where previous bearish cross that led to an extended move. First time price revisits that area. Expected to be good resistance, and it was. Resistance sends the market looking for support, which it found at the BBC and the zone. We pulled back held, but we spiked down and touched the zone. And then off we go, right back up to that same spot, double top, right where this high was yesterday. Triple top. then price comes back to the BBC, and then that 8:30 news that affected every single one of the markets came out. And reminder, the news tomorrow morning, the CPI, Bloomberg's looking for wild swings, as they put it, as I shared with you yesterday in that article. And so off that news, we came down and we tagged short target pretty much to the tick. Low from yesterday afternoon. Now, we came all the way down, but by the time the 30-minute candle closed, we were all the way back up to the zone overhead, taking out this high, and this high. Triple top we had going here. We hit the zone resistance, sends us looking for support, which we find at the BBC, and then that sends us up to challenge the high from Friday. Okay, this is Tuesday, Monday, Friday. So today's high was unable to take out Friday's high. Today's high was 28.98.5, 29. Penny and a half. Okay, that's a sign of weakness. The inability to take out Friday's high. So back we come to the BBC, the pullback holds. Support sends us looking for resistance, which we found at the zone. Resistance sends us looking for support, which we found right here. And now we're looking for resistance. We've got a high, a lower high, and a lower high, spanning 3 trading days. So as we approach the zone, I'll be surprised if the resistance takes out this high and sends us back to this high. But you got to embrace all possibilities. You're above the BBC. You know you got potential resistance here and here. Now, if in fact price does take us above this high, then you got a real nice window of opportunity right here. That's very conservative. 28.86, 28.92, 6 pennies, $300 per contract traded. And if it all came apart and came unglued and the weebles wobbled and everybody fell down, you got a great window of opportunity down here. Either way. Just don't trade in this crowded little mess right here. And last but not least, the euro. We opened right at the weekly zone, got below the BBC, and dropped right to the target. See how that works? Support sends us looking for resistance. So we get up to the zone, consolidate, get another leg up, tracement, leg up, and that news comes out, and we run down to the short target as we did on every single market. Quickly recovered. Now, we've got blue and climbing. We've already got the step line crossing blue and climbing. See how on the way up, you had the perfect stack, price, step line, blue and climbing. Now the step line has crossed blue and climbing. Blue and climbing is directly above price. That means it may be on its way to turning into red and falling, which is bearish. So we may go up and tap that, then come back to the BBC, or we could just drop from here right to the BBC. Is it impossible for price to just overcome blue and climbing and overcome these highs and trade into this area? No, it's not impossible. but it is definitely not the highest probability. And that's what having a definable edge is all about. Finding high probability, low risk trading opportunities that enable you to get your goal for the day so you can put the mouse away and go do life. On the daily, we had a doji, Now we got a little flesh on this wick. Looks like it might want to trade higher. Let's go back and look at it. What's it trying to do? Yeah. Now that's what it looked like on the daily. This is on the 30-minute. What do you got overhead? Red and falling. Potential resistance. The price has just been pinging from the BBC down to the zone, back to the BBC. So on the daily, it looks like it's gearing up to go higher. But when you take that closer look, it could. It could overcome the BBC. It could overcome red and falling. It could overcome all of these highs today. It could overcome yesterday's high. But that's not the highest probability move. The highest probability move is back to the zone. And then if we can get below the zone, back down to the short target and back down to the zone below, and then ultimately below the session. That's the highest probability. As you can see, stop line crossing. Remember tomorrow morning to be aware or on the lookout for those wild swings. Be flat. Just let it all play out. There'll be plenty of opportunity. Once the news hits, once the market absorbs the news, whatever it is, and reacts, we don't want to trade the reaction. We want to trade the reaction to the reaction. Go to mytradingiq.com to become a member today. If you have any questions, call 949-42-EMINI or send an email to support@cfrn.net. 9 out of 10 new traders don't make it because they don't have anyone to teach them how to do the job. If you want someone to teach you how to do the job in an interactive environment, 2 hours every trading day, then you should come here and become a member. Along with the live training every trading day, also have access to private one-on-one mentoring, the strategy you learn, the indicators you own as a passport holder, fluid across all markets and all time frames, futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and all time frames. Support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. As a passport holder, you also receive the Logic 247 alerts, the concierge trade alerts, the weekly trading zones. You're able to attend a Thursday night members-only workshop. All that and much more. Everything a trader needs, all under one roof, one low price. mytradingiq.com. Let's wrap it up with our good word for the day. Yesterday we talked about changing your self-perception. Today, a word of encouragement. You will get through this. Ecclesiastes chapter 3 tells us that to everything there is a season, time to weep and a time to laugh. Now that's just verses Verse 1. Sorrow comes to us in many forms. You could lose your job, your home, or your health, or all three. But nothing hurts more than when you lose someone you love dearly. Waves of grief will come at you like the ocean throwing its waves up onto the beach. Whatever you do, don't drown. Don't stop there and allow yourself to be pulled under by the current. Allow yourself to feel the grief without tying it around your neck. Allow the weight of it to help you work through your thoughts, fears, and if necessary, your tears. Grieving relieves the soul. Like exhaling carbon dioxide relieves your body. But there comes a point at which you must get up and go on. The stages of grief you go through are shock, then denial, then bargaining, then sorrow, and finally acceptance. David said in Psalm 23:4, Yea, though I walk through the valley of the shadow of death, I will fear no evil, for thou art with me. Thy rod and thy staff, they comfort me. When you get through this valley, you will be able to look back with more gratitude and less grief. Instead of focusing on what you have lost, you'll be thankful for what you have left. And don't be afraid to indulge in those rare moments of laughter that come even in the face of heartbreak. Laughter medicates the soul and alleviates the tension of those times. It requires us to step outside our present pain and adjust our focus. This, in itself, is a healing balm. Proverbs 17:22 says, A merry heart doeth good like a medicine. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.